I think we get it started with Microsoft and the markets. David Nicholas joining us first thing. Right, David, I want to talk big tech. Microsoft reports after the bell. I want to hear how Microsoft is going to incorporate artificial intelligence. And I think we might hear something about that in the call. What do you say?
Well, they're going to need to focus on that, Stuart, because PC sales are falling off a cliff. I mean, if you just look at Microsoft's last quarter revenue growth, it grew 11%. That was the slowest revenue growth for Microsoft in 5 years. What are analysts expecting for this quarter? 3% revenue growth, and for earnings to drop about 8% for the quarter. So I agree with you. You're right. They better talk about AI. They better talk about gaming, because that's the future for Microsoft. Software and PC sales for this year, I think it's going to put a lag on Microsoft's growth. So if you're buying Microsoft, which, Stuart, I know you like it, it's not to make money this year, because I think the stock's not going anywhere, but it's to make money over the next 3 to 5 years if they can be successful in AI, which I am very excited to hear about what they have to say about that, Stuart.
If they disappoint, if Microsoft disappoints this afternoon, could they take down other big tech stocks which report later in the week and next week?
Well, yeah, Microsoft's actually fared a lot better than names like Amazon, Facebook. So if Microsoft does not report well, I would expect the same thing for the other names. Yes, it could bring the market down, but this is what I would tell investors, Stuart, use these as buying opportunities. We are not in for a big recession this year. I know I may be alone on this, but use weakness. Be excited about that. Add to names like Microsoft for long-term growth, Stuart.
So you see the market doing quite well this year. I think, what's the expression you use? You see green light. You've got the stocks have a green light for the future. Is that your statement?
Yeah. So I'll tell you why. Here's a data fact that I think a lot of investors are missing. If you look at the payroll report from December, there are 1.2 million more jobs today than there were in February of 2020 before the pandemic. If you want an answer as to where this economy is headed, I know employment's a lagging indicator, but we have 1 million more Americans working. You're not going to get this big economic slowdown when you have that little slack in the labor market. So any bit of good news, I know we've got a lot of analysts that come on and they're pretty bearish, but if we get any whiff of good news, Stuart, with where things are at, that's why you're going to see these rip higher for the markets. There are sector recessions, and this is the biggest distinction I can make. We're seeing recessions in technology, in office, in crypto, but there's a bull market in energy, in healthcare, in travel. Stuart, if you look at the travel stocks like Carnival, like Wynn Hotels, there's a bull market to be had there. You just need to own the names. So don't follow fear. Follow the money, and the money is flowing to those sectors, Stuart, that are still doing well and hiring in this environment.
David Nicholas, we hear you. Thanks for being on the show this morning. Big day. Thanks a lot.